Warren Buffett's advice has shaped the way millions of investors think about the stock market. But here's the shocking truth. Even the Oracle of Omaha himself warns that everything you know about investing might change in 2025. In fact, did you know that Buffett's Berkshire Hathaway has outperformed the S&P 500 by over 2,700% since 1965? That's right. His strategy isn't just about picking stocks, it's about making smart decisions in a rapidly changing world. But with market conditions shifting, what does he see coming next? In this video, we're diving into Buffett's biggest warnings for stock investors in 2025. From overpriced stocks to the risks of tech disruption, we'll cover the strategies you need to know. Want to know how patience and caution will be your best friends? Or why the stock market might not be what you think it is? Stick around to find out how Buffett's time-tested principles can help you navigate the future. Get ready for a fresh perspective that might just change the way you invest forever. Chapter 1. Buffett's Crystal Ball. How 2025 will change the investing game. Warren Buffett has always been one step ahead, but what about the future? As 2025 approaches, we must ask, what is Buffett's strategy for a rapidly evolving market? His thoughts on stock investing have been tested over decades, but even Buffett himself acknowledges that the future will look different. The stock market is a device for transferring money from the impatient to the patient, he famously said. In 2025, patience will likely be more important than ever. With tech stocks in the limelight, people often forget that Buffett didn't start investing in the sector until later in his career. That's a reminder. Don't rush into the latest trend. Buffett knows that great investments are rarely born overnight. His crystal ball says the big winners in 2025 will come from companies that are focused on real value, those with strong fundamentals. It's the old-school stocks, the ones with steady earnings and solid management. It's tempting to chase growth stocks, but Buffett's patience and discipline are what keep him ahead. His advice? Don't get caught up in speculative fever. History has shown that the market often overreacts, creating opportunities for those who wait. And according to the latest statistics, long-term investing continues to outperform short-term speculation. In fact, data from Vanguard shows that investors who held stocks for over 20 years saw an average annual return of 9%. Patience pays. Chapter 2. The Risk of Overpaying. Buffett's wake-up call for 2025. Overpaying for stocks is a mistake many investors make, especially in times of market euphoria. Buffett's words still ring true. Price is what you pay. Value is what you get. In 2025, this advice will be crucial. With stock valuations at all-time highs in recent years, it's easy to get caught up in the hype. But Buffett warns against falling into that trap. A company's stock price might seem attractive, but if it's overpriced, you're setting yourself up for losses. This is especially true as we move into a market that might be under pressure from economic shifts like rising interest rates. Look at the dot-com bubble of 2000. Many investors paid high prices for companies that weren't profitable, and most of them never recovered. According to recent data, about 70% of IPOs in 2020 were underperforming by 2023, which only proves the point. Buffett focuses on intrinsic value, a company's true worth, not just what the market is willing to pay. This concept will be especially important in 2025 when investors may be too eager to jump into hot stocks. In short, don't pay a premium for what looks like a deal. It's not a deal if the value isn't there. Remember, the key is to buy good businesses at fair prices, not overpriced dreams. Chapter 3. The Power of Patience. Buffett's secret weapon in the chaos of 2025. If there's one thing Buffett has taught investors, it's the power of patience. Our favorite holding period is forever, he says. In 2025, this timeless approach will be even more relevant. As the market continues to face uncertainty, including economic slowdowns and geopolitical tensions, those who panic will likely miss out on the long-term opportunities. Buffett's strategy isn't about chasing short-term profits, it's about owning businesses that will thrive over decades. Recent data shows that the S&P 500 has had an average return of 7.9% annually over the past 90 years. What's the catch? You have to hold long enough to weather the ups and downs. Patience gives investors time to let compounding work its magic. Buffett also stresses the importance of avoiding the temptation to trade constantly. According to a study by the Journal of Financial Economics, the more often investors trade, the lower their returns tend to be. The best investments? Those that compound steadily over time. The idea is simple: buy solid companies and hold on to them. As Buffett has said, it's far better to buy a wonderful company at a fair price than a fair company at a wonderful price. So, in 2025, slow and steady wins the race. Don't forget to subscribe to stay updated on more investing tips and deep dives into Warren Buffett's strategies. Chapter 4. Tech Disruption. Buffett's unlikely view on the future of innovation. Warren Buffett is often associated with traditional industries like insurance, railroads, and consumer goods. But that doesn't mean he's blind to innovation. He's learned to adapt. In 2025, we'll likely see Buffett continue to evolve with technology, though with his signature caution. Buffett has always preferred businesses he understands, and that's why he stayed away from tech for so long. However, when he invested in Apple, many saw it as a turning point. Tech stocks have been the market's biggest winners, but Buffett reminds us that not all innovation is worth the hype. Companies like Amazon and Apple have shown that tech can drive incredible value, but not every tech startup is worth your attention. Remember his thoughts on Bitcoin: it's a mirage, basically. In 2025, this philosophy will still guide his strategy. He will continue to invest in tech, but only in companies that have a track record of profitability and clear value. He's also likely to avoid the fast-paced speculative stocks. When looking for tech investments, he'll favor companies with strong, sustainable growth, not just the next big thing. After all, a company's ability to create cash flow, not just ideas, is what drives Buffett's decision-making. Chapter 5. Inflation, Interest Rates, and Your Portfolio. Buffett's warning for 2025. As we look ahead to 2025, inflation and rising interest rates will likely be top of mind for investors. Warren Buffett's approach to navigating these conditions has always been clear: focus on businesses with pricing power and strong balance sheets. In an environment where inflation could eat into profits, companies that can raise prices without losing customers are key. Buffett often points to Coca-Cola, a company that has consistently raised prices over the decades. With inflation projected to remain elevated for years, the companies best able to weather these storms are those with strong, brand-driven consumer demand. Interest rates are another concern. When rates rise, borrowing costs go up, which can hurt businesses that rely on debt. Buffett avoids companies with excessive leverage, and in 2025, that will be even more important. In fact, research by Morningstar shows that companies with strong balance sheets tend to perform better during times of rising interest rates. The focus on value, not speculation, will allow investors to stay ahead. Buffett's warning is clear: the companies that succeed in 2025 will be the ones with a firm grasp on both their pricing power and financial stability. Chapter 6. The Buffett Signal. Decoding his moves in 2025. Warren Buffett is often seen as an oracle, but what if you could decode his moves? In 2025, the Buffett Signal will continue to be a useful tool for investors who want to follow in his footsteps. One of Buffett's main strategies is to invest in companies that are simple to understand. If a business is too complex or doesn't make sense, he moves on. In 2025, this will likely mean that he avoids the more speculative sectors like cryptocurrencies or niche biotech firms. Another key part of the Buffett Signal is his emphasis on strong management teams. He's always said that the best business is one run by a capable and honest manager. This will likely remain a key factor in 2025. Investors should look for companies with proven leadership that focuses on sustainable growth. Finally, Buffett tends to buy when others are fearful. When markets are down or uncertain, that's when he sees opportunities. Data from J.P. Morgan shows that the best years for stock returns often follow major market declines. So, in 2025, look for Buffett's moves, and you might just find the best opportunities hiding in plain sight. By following his lead and focusing on long-term, value-based investing, you can navigate the uncertainties ahead. Subscribe now to learn more about how to master the art of value investing and stay ahead in the unpredictable market of 2025.